Welcome back to Making Money Matter, ladies and gentlemen. Now, you asked, I'm bringing it back to you. In February of this year, I asked David Dickson some questions about Lake Resources. He's the CEO and Managing Director of Lake Resources with their flagship project, Cachi, in Argentina. The ASX code is LKE. Now, lots of you have reached out to me to ask to bring David back on, ask some hard questions, and really get to the bottom of what is happening with Lake Resources. And what I want all of us to understand is, first and foremost, to all of you out there, it's not really a mining company. I want David to explain that a little bit more. This is more a chemical production company. It's in the lithium space, and we all know most of the lithium companies out there, and especially those in production, are hurting. Lake is no exception. And I know a lot of you have reached out to me and said that, you guys are hurting out there. The investors are hurting. So I'm going to ask some hard questions of you, David, this morning. But thanks so much for joining me on Making Money Matter.
Thanks for having me.
All right. Well, the last time you and I spoke was in February of this year. It's not been easy. I'm talking to you again in July of 2024. Share price has suffered. As to be fair, David, I don't want to, be too tough on you. All lithium companies are suffering a lot today, but investors in Lake in particular, and that's what we're talking about, they're hurting at the moment. And the staff cutting that you've recently done doesn't send necessarily a very good signal. So what do you say to address those people out there that are probably pissed off, angry, hurting right now?
Well, I think, you're right. And so let me kind of talk about a few things. We spoke in February, and if I recall it, February, the sentiment in Australia was post-Chinese New Year that maybe a lithium price would start to trend in the right direction. And they did actually for a very short period of time, but for a very little amount. And so there started to be a little bit of positive sentiment. But today, what we're seeing is obviously both lithium carbonate pricing drop off, but also we see obviously spodumene pricing, et cetera, all drop off as well. So again, it's really a reflection of where we are with lithium pricing and the whole supply demand and the issues around that. And so when I look at it, and I've said this many times before, what is a catalyst that makes things change?
Yeah.
And really what's going to happen now is it's going to take, my belief, it's going to be legislation that's really going to drive the change, right? So what I mean by that is, if you look at EV penetration around the world, obviously China is leading the world significantly, followed by a number of Asian countries. Obviously Australia is making good inroads. But certainly there's parts of the world that's still making progress, but probably not at the rate that probably people were thinking that penetration would occur at. So I'm talking about obviously Europe, US, obviously being the kind of two large markets. And so when I look at lithium pricing today, what is a catalyst? So you think about legislation, and legislation varies across various continents and various countries, but really driven around the reduction in the sales of internal combustion engine vehicles, and obviously replenishing that with electric vehicles. And if you go into Europe, legislation is kind of starts in 2030, depends on which country you're in.
Okay.
If you're in the UK, it's 2035, and in the US, it's 2032. So if you start to look at those timeframes and work back, and you think about the time it's going to take to build out these car manufacturing plants, and then you also time to build out battery manufacturing plants, and hey, all these facilities need one thing, and that is critical minerals, and also lithium being one of those critical materials. So if you actually believe in the fundamentals driven by legislation, that tells you that based on today, I think we're looking at a supply-demand deficit starting to kick in 2028, 29. Now, taking that back, and if you look at a project like Cachi, which the lead time is somewhere around about 2.5, maybe 3 years to get into production, that tells you these projects, and I'm not just talking about Cachi, I'm talking about the industry generally, particularly in the DLE world, And actually in the spodumene converter world, if you take an average 2 to 3 year timeline, that tells you that people need to start securing, or off-takers need to start securing lithium by somewhere around late 25 into 2026. So I think this period of low lithium pricing could be with us for a longer period of time. And the only thing I think that could start to move it is if off-takers start to move quicker. And what I mean by that is we've been through our strategic partnering process and talking to off-takers. It's clear that a number of off-takers still haven't secured lithium for that time frame of 2028, 2030 onwards, right? So go back to answering your question. I think you got to look at legislation and working back from legislation. When does this market really start to kick off? And my view is it's a 2025, 2026 when we should start to see an uptick in activity. I'd also say that today, when we look at supply and demand, is a lot of the work that you see isn't including the geopolitical impact, right? So sitting on the side of the globe that I sit on in the US, you can see there's a lot of rhetoric, particularly as they enter into election season around tariffs on not only just Chinese electric vehicles, but obviously Chinese components and also Chinese supply chain coming into the US, and same we see that for Europe. So today, when you look at lithium batteries, where something like close to 80% of lithium batteries are coming out of China, and close to 90% of lithium refining is in China.
Wow.
So we're gonna have to see some geopolitical shift. So, and I think people are struggling to how do you bring that into the equation? But always back to is I think in 25, 26, then we should start to see some sort of flurry of activity as people start to think about how do we secure our lithium. And obviously I see a lot of that from the discussions I'm having with not only potential off-takers, but obviously talking to some governments, because I liaise a lot with MSP, the Mineral Security Partnership, which is 14 countries who have got together to look at critical minerals from a non-Chinese supply. So there's a lot of discussion, a lot of activity. Unfortunately, it's not impacting lithium pricing today. That was a long answer.
Yeah, no, I'm taking it all in. One of the things I said earlier was that you did some staff cost cutting, yep, and that potentially sent a signal to the market that things were not going as well as might be expected. Tell us about what was the strategy behind doing that staff cost cutting, because to an outsider, it's like they're in trouble. They've going to have to cut costs. But maybe can you just explain that to us and the rationale and the strategy?
Yeah, I mean, firstly, we started our cost cutting process back in February, March time. I think we went public, we're cost cutting, I think it was sometime in March. And think about where we are in the journey. So 2023 was a big year for Lake Resources. We completed the exploration evaluation, the technology DFS. We get to the end of that, we've got obviously a large number of people who are now not got a lot to do, right? So where we're at today, operationally and technically, the things that we are doing to continue to make the project forward are two main things. One is applying for and going through the process of getting approvals for an environmental impact assessment to get our final production permit, right? And that permit is needed that allows us to move to a final investment decision. And we've been very open with the market is our aim was to submit the application by the end of March of this year, which we did. And we said to the market that's going to take 12 months, or we estimate up to 12 months to get approval. And today we're still saying that same time frame. And we are making progress. We've had a number of meetings with the officials in Catamarca. So the EIA work is progressing. The other item that we're working on is feed engineering study with regards to the power and getting power to Kachi. And we announced we're working with a company called YPF Luz, which is the power arm of YPF, and YPF is the National Oil and Gas Company of Argentina. That work will go on until the early part of next year. So from us as a company, we're still working technically operationally up until the end of March next year. However, we only need people to work on the EIA and people that are involved in the power side. So looking at that time frame, we always had plans to reduce the size of our team because we'd finished the drilling, we'd finished the work on the technology, etc. So we started that down manning back in March of earlier this year. And then what we announced recently is, because of the timing going on, is we realized, hey, let's start to save some more of our money in the light that lithium market takes longer to recover, to ensure that we build a longer runway with regards to our balance sheet, right? So we still had a number of people in the company that weren't fully active because of where we are in the process. So what we decided was to reduce the team again, but always making sure we didn't impact the work that's ongoing today around EIA, around the work on the power, but also around the other activities with strategic partnership, things around looking at sale of assets. So we've shrunken the team down to quite significantly reduced it down, but without any impact to the performance of the company. And all that is doing is to say, okay, we're going to preserve our cash, because although I have a forecast where I see lithium pricing maybe moving in 25 and 26, everybody's forecast could be different, but what's more important is making sure that we build a runway that takes us through to when we start to see the pickup in the market.
Because at these current prices, I think as I speak to you today, I think the lithium price is about 14,000. Is that correct?
Yeah, I mean, it depends on which index you look at, but yeah, I mean, it is fluctuating between $13,500 to $15,000 a ton. Yeah.
Does that make your project uneconomic at those prices? So is it more a case of, at the moment, thank God we're not in production, because we'd be going out the back door? I mean, that's being blunt. Do you feel like is this almost like a call option, because you can sit and wait until those lithium prices move, and inevitably they have to? You wouldn't want to be in production at these prices, because you'd have to, it puts you in a pretty difficult position, I would think.
Yeah. I mean, obviously, at today's prices, it's questionable who can actually make any money at these prices. Obviously, with a lack of transparency of what's happening in China, we don't actually know what the true cost is to produce lithium carbonate. And as was said before, the market in Western Australia is all about supplying hard rock spodumene to these facilities. So obviously, spodumene pricing has also taken a bit of a hit. But to your point, today, I think fortunate that we're not in production, although we're never going to be in production in this time frame anyhow. But today, two things I'm really happy is that we're not in production. But secondly, because where we're on a project, is I don't have any large capital commitments.
Okay.
So I'm not committed to spending any large sums of money as we progress the project. The Kachi asset itself is under the control of Lake Resources and has a long runway. And so, but I don't have any other. So my costs today really are around people.
You mentioned a moment ago sale of assets. What's that about? You've got the flagship project Kachi in the Catamarca district in Argentina. You've got some other projects. Are you selling those because that will release funds into the, what's the strategy around that?
Yeah, so what we did was we went through the exploration evaluation work. We highlighted to the market is our resource base is larger than we anticipated, right? But we set our DFS at 25,000 tons per annum. But what was clear from the exploration work is that Kachi has significant expansion opportunities. Now, can't go into given numbers because obviously we'd have to go and disclose that under JORC rules and things like that. But certainly what we demonstrated is Kachi is a significantly large resource. So we sat back and we looked at it and gone back to think about, this is not really a mining project. This is a specialty chemicals type project, right? I mean, yeah. We're sucking up this water, but really our focus and most of our CapEx dollars is actually conversion of the brine, or extraction of the lithium from the brine and converting to lithium carbonate. So when we looked at it, we said, okay, hang on, we've got this big catchy asset, which was invested a lot of money and developed, but we have these 4 other assets around different parts of Argentina, less developed. And what we realized is, hang on, resource is not our issue. We've got plenty of resources we identify from catchy, right? What our focus needs to be on is developing catchy more of a hub, because we've got so much resource, and looking at expanding that, because we believe we can expand catchy later on, more cost effective than going to develop 4 new assets. Because if you think about 4 new assets, you have to do exploration evaluation. You have to do a lot of engineering work. You have to get EIA studies done for each of those locations. 2 of these projects are in a different province, so we're now working with different governments. So when you look at it, it made sense to say, hang on, let's just focus on the first 25,000 tons of catchy. And at Lake, we've got an opportunity to expand, later on if the market continues to grow, etc. So we saw that as an opportunity. So what we're doing at the moment is we're out there looking to sell the assets. We haven't decided if we're selling the assets, but really out there looking to say, well, in the market, really what is the value of these assets to other people? Because some of these projects are actually adjacent to where there are other developments ongoing. So today we're kind of more doing a price discovery, what we think the value of these things are. If it makes sense to sell, then we'll move forward with the sale.
So does that mean that the Kachi project is the focus, and that's where, again, I come back to investors in the company, that's where the shareholder value, and I hesitate to use that word in the current market, David, because as I said at the start, I think investors are hurting. But you think that the focus for Lake going forward will be Kachi and not these other ones which can take the focus away. Am I reading that right?
Yeah, my big focus, because the value to our shareholders, one, there's value to be created once we get past the environmental impact assessment. Because once you get that last permit, there's nothing. The only thing that stops this project moving to a final investment decision is raising capital, right? So you've actually addressed all the technical issues and you've removed all the risk. So once you get environmental, so now you've created a significant amount of value. The reason focusing on Catchy is that'll be our earliest way to get to generating cash, right? So, and that's how we're going to develop value for our shareholders. I mean, apart from what's happening in the lithium pricing, you think to get to an EIA and then at some point get into a final investment decision, these are significant milestones when you look at the value of the asset. So our drive is really to drive Catchy as much as we can so we can get as early as we can to start generating some cash.
You mentioned power just before and what you're doing with power. I've had some feedback from people saying their biggest issue is going to be power. Why wasn't that like right up front in the early days? Well, it wasn't, but you are addressing it. How difficult is it going to be to get that power situation resolved, if you like?
Yeah, so we'll go back to is what you said. I mean, when I came into the company, I was extremely frustrated that this issue had not been addressed because it should have been one of the first things that should have been addressed. And we did a lot of work last year doing preliminary engineering work. That resulted on getting to the point we're at today where we selected a company now to do the feed engineering work. And at the end of that study is for us to finally agree a power purchase agreement with that company.
Okay.
And that means we will pay them X amount of cents for kilowatt hours, right? Good thing about that is it pulls Lake resources away from the capex involved, the development work of the power, all that sort of stuff. So it takes us out of that and allows power companies to do what power companies do, and that is provide power. We're not a power company. And to build in contingency into that, we also designed the 25,000 tons around 12,500 ton plants. And we can actually operate the first 12,500 ton plant without actually having to get power from the grid, right? So we can look at other forms of temporary power. So that took away the risk of relying on a power company and delivering the power in time to allow us to get to work. So there's a lot of thought, and we looked at it from a risk basis. But I'm now in a position today where power is not, whereas power used to be number one item in my kind of risk, it's probably down kind of 3 or 4. and I'm not, I'm not that, today I'm not that concerned.
All right. Talk to us a little bit about, if you could, that growth in demand, because one of the things I've been looking at is artificial intelligence, data, the need for security around data, and the fact that all of these data rooms are going to need, if you like, backup power. That is going to come potentially from sources of lithium power, those battery grids. Is that something, again, that you see will have an impact on the price going forward as AI continues to develop? We know it's the biggest thing going on at the moment. Everyone's talking about it.
Yeah, no, if you sit in the part of the world that I sit in today, I mean, I think constantly on TV, particularly on kind of the business channels, there's a lot of discussion around AI, and then how do you power these facilities? And then secondly, these facilities are major issues for our national security purposes. And so how do you then provide backup power? So there's primary power, backup power. And so a lot of discussion is now ongoing, certainly in the US and obviously around the world, but obviously I see it from a US perspective, is that energy storage system is likely to overtake demand, or the levels of demand higher than electric vehicles.
That's right.
From battery power systems. And I know you were recently visiting in the US and you have seen a lot of that now. I've been fortunate through my network to, talk to a number of these companies that are looking to develop these data systems and these data centers. And it is an item of concern around where does primary power come from? And then where does that backup power from? And so I think that, again, if you go to our fast markets and the benchmark, I don't think a lot of that really is built into the demand side of the equation. Now, that might not be a 2028 or 2030 issue, but certainly post 2030, then you're going to have demand for both EVs and for energy storage systems. But I think the energy storage systems is potentially going to, from what I see in the discussions I've had, is I think potentially energy storage systems becomes, higher demand than from EVs.
David, I need to finish it up now, but I want to go right back to the beginning where I said to you, the share price has been technical. Let's go technical, smashed. You have to build that trust back up with shareholders. What would you say to my audience out there that are shareholders that are hurting? I have personal friends of mine that are hurting at the moment. How are you going to build that trust back with those people?
Yeah, I mean, also, I share this with shareholders. I'm invested as well in the company. So, when I came in, obviously a lot of my compensation is driven around share performance. And you're right, looking at where the share price is today, it's very difficult to understand why we're at this point. And a lot of it is obviously driven by sentiment. I think the second element of that, though, is people question, does this project ever happen, right? Because unfortunately, when I came in, I had to reset a number of things. I had to reset the company, I had to reset the project. Actually, if you look at technically, operationally, nothing has changed in this project since what we declared that they are published in the DFS back in December 23. We're always targeting to have the EIA approval at the end of March next year. The feed work and the power was always targeted to be completed by early part of next year, to allow us to move to a final investment decision sometime mid to second half of 2025. That plan has not changed.
Okay.
What I have done, though, is to put in or start thinking about more contingency around, well, what happens if lithium pricing doesn't recover and it shifts to the right again, right? And none of us can forecast what's actually going to happen. We can look at the data and we can build a business around the data. So the whole purpose of focusing on cost cutting and looking at the sale of the assets is to make sure I extend the runway that, the Lake Resources is definitely here as we go through this whole process, waiting for the lithium markets to recover. So stick with us. We're doing everything we can operationally, as I said. I'm very confident on the EIA. The work we're doing on the feed is good. And the other thing just to add as well is that, and you never asked me about this, but also the tone and the sentiment in Argentina has improved significantly over the last 6 months.
Okay.
And I've been in Argentina for 2 trips over the last 4 or 5 weeks.
Mm-hmm.
I had the pleasure of meeting with the chief of staff or the chief of cabinet to the new president. And we talked about the new bill that was passed called the RIGI bill, RIGI, which is all driven about to encourage foreign investment into Argentina. So when you look at lithium in the future, where are the areas that's going to provide lithium? So you got China, but from a geopolitical aspect, what are the other areas? It's the US, Africa, a little bit of Europe, but predominantly more than 50% of it is going to be in the lithium triangle. And over a period of time, that's predominantly going to become Argentina. So fairness to Argentina, as the government understands this, and they've done a lot of work to start to put things in place to encourage foreign investment. So, the trips I've been down the last 2 times have been extremely encouraging. And now we're starting to see companies within Argentina, big name companies in Argentina, now starting to look at potential long-term investments in the lithium sector. So I think over the last 6 months, we're starting to see quite a shift.
David Dickson, run out of time. Good to see you. Come back, keep us updated, and let's talk again in the future very soon. But I appreciate your time.
Thank you very much, Kerry. Thank you.